This is Eric Mwatha with Mwatha.com for the weekend of January 24th and January 25th, 2014. Let's take a look at the US markets here. We begin by taking a look at Friday's close. We see that the Dow was down the most among the major averages, down 0.79. Nasdaq was positive on Friday. S&P 500 was down 0.55. And we see that crude oil was down again 1.55. with gold being down slightly, and we see that the VIX did close up 1.5%. For the week, we see that the S&P 500 was up 1.6%, closing back above that 10-week moving average. For the week, we see that the Nasdaq also was actually up the most, 2.66%, moving itself back above that 10-week moving average. We take a look at the Dow, which was up 0.92% for the week and also close to the 10-week moving average. So let's take a look at the charts here. We begin by taking a look at the Nasdaq Weekly. And we see from the Nasdaq Weekly that now it is coming very close to the previous recent weekly closing high of 4806.86, which means if it can move above that price range, it's going to be staging a fresh breakout and also open the opportunity for higher prices. So 4806.86 is the level to watch. You can set an alert for that level. If the market moves above that, then yes, it could be open to seeing higher prices. Now keep in mind that the highs for 2000 were about 3000 in that range. So if the market wants to do what the Dow and the S&P 500 have done over the last couple of years, then the Nasdaq could be the next major market to move to all-time highs. So that number could be what the market is trying to do. Just keep that in mind, that maybe the market also wants to push the Nasdaq to record fresh all-time highs well above the 2000 highs. Now let's take a look at the Nasdaq on the weekly. Here we can see that it has been recently bouncing above the 50 level ever since it moved above this level here beginning of 2013. This is a weekly chart going back to 2012. And we can see that it's been holding the 50 level on the weekly RSI, and now it's coming close there, and seemingly it is bouncing on that level. So that looks okay in terms of bullish trend. If you take a look at the MACDs, we can see that at least one of the MACDs is making some type of support move, holding above zero, and as long as it's bouncing on the zero line, that would be showing that the momentum could now be swinging back to the positive after shallow pullback in the market. If we take a look at the Nasdaq from a daily chart, we can see that we've come back a couple of weeks ago. As of last weekend, we came back to this level here and held, and this is coming off the breakout level. So the market was using the same breakout level down the road for support. It held here, and also held there. We see that we are back above the 50-day moving average. Now all these are just signs of a market that is still healthy. Even after a series of pullbacks, the market continues being healthy. We had also seen a couple of weeks ago that the market had come back to this line of support on the daily RSI, and that seemed to have held the market together at that point. We also spent some time talking about this line, which is where the market has been bouncing since about 2012 on the daily. So this RSI line on the daily is where the market has been finding support, and if you went long on most of the instruments around this level, at least you had a chance of recording a good return. So every time the market has used this as an entry level, the market has had a nice swing trade to the upside, and this has been holding for quite a while. uniform activity below the line, back above it, and on and on. So this is something we've been talking about for the last 2 years or so. The market's been coming back to this level and holding, and it did the same thing about 2 weeks ago. If you take a look at the MACD, and I have 2 MACD settings on this chart, you can see that we had support on the MACD, and now the MACD has moved back above 0, which is a sign of strength. And we also have the main MACD coiling, and it looks like it wants to go back above that 0 point on the MACD. So the more it coils below 0 and moves back above 0 with uniform activity, so let me show that again. The more this is uniform activity below the 0 line and back above it, suggests that this could truly develop into a nice move to the upside on a week-to-week time frame. So let's take a look at the hourly for the Nasdaq. And the Nasdaq is slightly different from the Dow and the S&P 500, and I'll show you what I mean by that. Now on this RSI setting, we are talking about RSI 14. We can see that we broke out above the declining RSI line. So we broke out above this line with this move there, which is bullish, or was bullish at the time. And we also broke out above this level of resistance, which is where we were expecting resistance and the market to come off the highs, or a breakout and the market to move higher. Definitely we can see here we had a push above those 2 lines, which might explain to this price explosion in terms of the Nasdaq over the last day and a half. If you take a look at, now let's take a look at the Dow Weekly. And on the Dow Weekly, we can see that it is back to a line of support on the weekly. This chart goes back to 2011 on a weekly time frame, draw a straight line. Now this line comes from this lows on the RSI there, connecting this low there. And if you draw a straight line, you can see that the market has been coming back to this level and holding every time. Every time the market has been bouncing on that line, it has moved higher. We have uniform activity below the line, back above it, which makes this level here a buy. And also we've come here and held, which is late last year. And now if the market can continue bouncing on that line with this positive close in the past week, then that looks like it could eventually find its way to the upside. So we'll keep watching that. Right now it looks like it's the market showing RSI support, suggesting higher prices on a weekly time frame. Again, this is the line. Above this, the market is bullish. Of course, if the market breaks below that line of support, then we are going to see a push to the downside. If we take a look at the Dow Jones daily chart, and this one is a little bit too busy, but we can see that there seems to be, as of Friday's close, some type of resistance connecting the highs on the price. If you take the highs and draw a straight line, market seems to be finding resistance, and that's why maybe we pull back on Friday. We can also see that the RSI is showing RSI highs resistance. And what I can do here is show you, let's take a look at a fresh chart for the Dow. The one I have is too busy, has too many lines. So let's go to a fresh looking chart for the Dow, and we can see on the fresh chart, without any annotation, that we have the highs. If you take the intraday highs, draw a straight line, you can see they connect to the most recent highs in the market on the daily. So the market needs to be above this line if it's going to start moving to the upside. We can also draw a line connecting the highs on the RSI like that, and it comes in contact with this line close to this one, and also shows the possibility and the reason why the market had a pullback on the Dow on Friday, because maybe the market is respecting this line here. So that's one view. The other view is coming off these highs. We had a relatively good size pullback here. So we go and find out where that pullback began, and we see that it has happened during, oops, let me start that again. And what we have here is, if I draw the line like this and then a straight horizontal line like that, we can see that we had uniform activity above the line and back below it, which gave us a short-term high and a pullback, so we know that line is legit. We did break below that line here and a pullback for a couple of days, which led to this drop. We came here, we had uniform activity above the line and back below it, which gave us the current high on the Dow, and now we seem to have come back and showing resistance around the line, which is already beginning a move lower. So depending on how things go, maybe this is telling us that here's a market that could pull back. Maybe the Dow is the one giving us that look and feel in terms of the major averages. If we take a look now at the Dow from a 60-minute chart, and I discussed this towards the end of the past week, you can see that if you take the RSI highs and draw a simple straight line coming into Friday, we saw that this could have been a level of resistance. We discussed this Friday morning, that this is where the market was showing resistance, especially on the S&P 500. But here we are discussing the Dow, and on the hourly, this is where it made sense for a pullback to take place. And now I'm using the RSI period of 26, and that's why I get that unique look. Also, we see that the previous break of this high here, that previous break was when the RSI did break below it there, and draw a simple line. You can see that we came here into Friday's highs, Thursday's highs, and stalled, and that's why we had this pullback in terms of Friday action. Let's take a look at the Dow now from a 30-minute chart. And from this 30-minute chart for the Dow Jones, we can see that if we find out where the market began pulling back from these highs, we see that there was a break on the RSI somewhere there. So that break in the RSI corresponds with that high, so we can draw a line from there like that. And you can see we've come to this line or close to it a couple of occasions here with uniform activity, which was that high, came very close there, not close enough, but again gave us another high. And over the last 2 days, we've come here with uniform activity, hit that line, and are now pulling back. Also, you can see that it connects to a prior line of resistance on the RSI. So this point does make sense and explains why the market was pulling back on Friday. And we discussed that Friday at the open for subscribers. Now, if you take a look at the Nasdaq, at the Dow Jones transports, and what I wanted to point out here on the transports is, if you take a look at where it's been bouncing on the 50 level of the weekly RSI, so bouncing here since late 2012, this has been a nice place to go along the Dow transports after a pullback. Successfully always telling you where the market is about to bounce. Even recently here, late last year, during this pullback, the market held below 50 and above 50 with uniform activity, and we can see this week it seems to have come close enough to 50, but now bouncing to the upside. As long as it's holding above the 50, generally we can see that the Dow transports still look good in terms of holding steady after a nice run since 2012. If we take a look at the transports from an hourly chart, just like the Dow, we can see that there's a line connecting the highs on the daily RSI. So this line is connecting the highs. It connects this point, this high, and the most recent high coming off Thursday's highs. So that could be a problem. If the market wants to move high, it's going to have to find a way of moving above this line of resistance. So for now, this one is suspect in my opinion until it can climb above that RSI top line. Take a look at the hourly for the transports, and what we see here is just like the Dow. If you take a look at the RSI, draw a straight line connecting the highs, you can see that it connects the most recent high through here and also coming in contact with the highs of Thursday. and if you draw a line from the prior break, and that line corresponds with this high, which is this point, also happens to be uniform activity. Let me remove all that stuff so I can show you what I mean. So we have the high there, we know that for a fact, and so we found out where that began, and that corresponds with this right there. That corresponds with the RSI break here, so we draw a straight line from there. Because of that break, draw a straight line, and the market has used this before for resistance here, which gave us these highs and a pullback, and now we've come here with uniform activity. We've gone above the line and back below it. So that could be the early signs of a market that wants to pull back. And of course, I did mention that the RSI connects the high. So hour to hour, it seems like the Dow transports are telling us the market could easily be on a pullback mode. Go to the S&P 500. We begin by the S&P 500 weekly. And on the weekly, we see a nice bounce around the 50 level of the weekly RSI, just like it had been doing over the last couple of years. Coming to the 50 on the weekly RSI and bouncing has been very good for the markets. And this has been the theme going back to 2012 also. Bouncing back above 50, nice entry. Bouncing back above 50, nice entry there. So this is where the markets have been bouncing on the 50 level on the S&P 500 RSI, and recently over the last 2-3 weeks it's come here, seems to be holding. So that looks good from that chart by itself. Now the S&P 500 daily is showing, just like the Dow and the Dow transports, a line of resistance on the daily RSI, which connects a couple of points here, and also there, which corresponds with the highs of Thursday's close and why we might have had that pullback on Friday. So if the market is going to do well in terms of the S&P 500, it does need to be moving above that declining RSI line. Otherwise, that resistance could also suggest short-term day-to-day the markets could be due for a pullback. If we take a look at the S&P 500 hourly, and this is a chart I shared with subscribers first thing on Friday, we were thinking the market could pull back because the market had come back after Thursday's nice close, and you see that it came back to this declining RSI line. So that was one line of resistance. There was also another line of resistance if you draw it like that, and this is where we got another pullback off these highs, is where we get the market recording a high and a pullback. So another line from there, you can see those two lines were making contact with where the RSI closed as of Thursday. So a pullback on Friday made a lot of sense. Now let's take a look at the Canadian market, which had a nice week. For the week, the Canadian market was up 3.28%, and one of the reasons why it was a nice week to the upside in terms of relative strength and magnitude of that move this past week is because the RSI moved back above 50. Every time it moves above or below 50, you get big price swings. As you can see, a move above 50 here, which was for this big week up, a big down week somewhere here, which was during this relatively big week down. Recently we had another week down here back below 50, which corresponds with this drop, and now we have another nice upswing with a nice weekly close because the RSI moved back above 50. And so just as long as you know where the markets are trading in terms of their RSI, you can see below 50 you get a big swing, and above, every time you move above 50 on the weekly, daily or monthly chart, doesn't matter what chart you're looking at, but every time you move above or below 50 you get a big, relatively big swing in a stock. And we can see here we're back above the 10-week moving average, which is at least a sign of a market that wants to recover after it had had this drop and this volatility. So staying above the 10-week moving average could be okay. I'm not sure how this is going to be. We definitely do need to see more upside if this is going to build on this current move. You can also see a line of resistance on the weekly. If you take the highs, connect this high and extend it, you can see that this is exactly where the market closed on the line. So if the market, Canadian market, is going to do well, it does need to be above that declining line of resistance. The one thing I do like in terms of the Canadian market is the MACD. And if I show you the MACD, you can see that at least one of the MACDs could have a chance of moving back above zero. If it can stay above zero, that would suggest that the momentum has now flipped and the market is looking to go higher. Otherwise, if it cannot move back above zero, then we are going to roll over in the MACD, and we are going to roll over also in price, suggesting lower prices for the Canadian market. Let's go to the daily, and you can see here that the TSX, if you take the highs, just like we saw on the weekly chart, this daily chart is showing resistance like that. So the market came in contact here and seems to be respecting that line of resistance. If it's going to do well, of course it needs to jump above that line. Otherwise, trading below this line could suggest lower prices. We can also see 3 points of resistance on this chart. We begin with the obvious one, the RSI highs. If you do a line connecting the RSI highs, you see that it comes through here, connects, touches that line, this line, or that high, this high, through this high, touches that high, and also where we closed on Friday. So that would be an obvious line of resistance, indicating if it cannot move above that line, we should expect a pullback. There's also another line. Now this line is based on the prior line of, so if we take this lows, multiple lows, in 2014, draw a straight line, it comes to something like that. And every time the market would find support in 2014, the market bounced higher. Ever since we broke below this line here, we've seen that the market has come off its highs and started plunging. And every time since then we move below that line, we can see that the market does pull back. We did the same thing here, and the market does pull back. So let me take all that stuff and show you what I'm talking about. And we take this line like that. You can see every time we move below this line, we get a market pullback. We came here, went above the line and back below it, which was this pullback here. We touched the line here, which was this high. And so you can see that if the market does coil back below the line like that, then that's going to be also suggesting that this is short-term high. It also happens to be around the 200-day moving average, which could very easily be acting as resistance now that we have the market pointing down in terms of the crossover between the 50 crossing underneath the 200-day moving average. So that's line number 2. So you can see line number 1 was here connecting the highs. This is line number 2. And line number 3, I'm going to use a different color, which is coming off this most recent break here. So this break point corresponds with these highs there. And I know it's getting a little busy on the chart here, so I'll draw a simple straight line. And this is exactly where the market stopped on Friday. So I think we have those 3 lines, and I'm going to do that one more time just for the sake of clarity. We got line number 1 coming in contact with where it was closing on Friday. Line number 2, the previous lows line. Here you can see it connected the lows through these lows. Extend the same line. You can see that this is also possibility of back test failure, and recently broke below this level here to a straight line. All of this come in contact with where it closed on Friday, suggesting that it should not be surprising to anybody if the Canadian market starts the week pointing down. Okay, let's come back to the US. We begin by taking a look at the VIX. So the VIX, and when I was taking a look at the VIX before recording this video, I noticed that the VIX on the, let's say, the daily, if you remember a couple of weeks ago, we talked about the VIX was indicating that the market could be coming back after So the VIX was indicating resistance on a line where it has been stalling. The VIX has been notorious for stalling on this level or at this level. Every time over the last 1-2 years it comes to this level, it stalls. The general market is a buy. And here uniform activity above the line, back below it, the market was a buy. And recently we saw this double top on the VIX, and we suspected that the market would be a buy. That analysis has been proven correct. Since the VIX has gone down, general markets have had a nice bounce. So that makes a lot of sense. If you take a look at the weekly for the VIX, you can see that now the weekly is pointing and showing resistance on a line that has been established. This line here connects the highs on the VIX like that. So this RSI highs connects the VIX highs here on the RSI through this high, through this one. You have uniform activity above the line, back below it. So it means we can draw through that line, resistance there and again there. So the VIX pulling back on a weekly chart makes a lot of sense, and why the market is doing well. Also, the VIX failed to hold above the prior weekly closing high of 21.99. So all these weeks here, we can see that the VIX tried to close above 21.99 on multiple occasions and failed. Because the VIX failed, it suggested it was going to pull back. The general market was a buy even coming into this week. If you take a look at the VIX hourly, just want to point out that the hourly chart analysis we had done a couple of weeks ago made a lot of sense, because it told us this was a high, and if this was a high for the VIX, it meant that the general market was a buy. Going back a couple of 1 or 2 weeks back here, we suspected the market would be back in play because the VIX was stalling. And why was the VIX stalling? Because it came back to this red line where it has been stalling for a couple of years, if not months. Every time the VIX comes to this level and stalls, the general market is a buy every single time. And so when it stalled here on the hourly, we suspected that the VIX would stall. The market was a buy. On this one, I'm using the RSI period of 26. And we also talked about a line, which I won't go into detail, but this backtest line. And the VIX had come back and was showing resistance on that line. So the pullback made sense, is all I'm trying to say. And that's why the market has been relatively strong. We take a look at Apple. We begin by taking a look at the daily. And we talked about the line of support on the daily chart, on the RSI, this line here. Oops. So this line looked like it was showing us support. So once Apple came here and started bouncing on the line, we suspected that it was due for a pullback. We see that it is back around the 50-day moving average. So yes, it's not out of trouble after making these highs here around close to 120, but the RSI is already showing support. So until we see more evidence, I say this is constructive enough, and these levels of support on an established line on the RSI suggested that the stock was due for a pullback. For a snapback move higher, and we are getting that snapback move higher already. Does it mean that it has to go and make new highs? Not necessarily, but until we see more information, it looks okay, in my opinion. We take a look at Apple from a weekly standpoint. And we can see that the RSI has been bouncing on the 50 line of the weekly RSI. And if you know that, you can see that every time it comes to the 50, since 2013, it has been a nice place to go long. It bounced again on the 50 level here, which were those lows. It bounced at the 50 level again, sometime in 2014, which were those lows. And recently, over the last 2-3 weeks, it's come back and has bounced on the 50 level of the RSI. So as long as it's holding above 50, and as long as it's trading back above the 10-week moving average, here's a stock that is just going through the motions, but eventually it looks stable and is not broken. We take a look at the monthly, and we can see that the monthly continues holding above 69.1. So as long as the monthly RSI for Apple is above 69.1, here's a market that could continue doing well. You can see that, for example, in 2010 it moved above 69.1 here at a split adjusted price of about $30, and it generally stayed above 69.1 throughout this period, enough to see the stock jump from $30 all the way to $90. So 3 times your money, just because the RSI generally stayed above 69.1. So that's why I'm staying. Holding above 69.1 has been very good for the stock. In fact, it has been above 69.1 since sometime middle of 2014, which might explain why it's been having this nice month-to-month move to the upside. In conclusion, I want to take a look at some monthly charts, and let's take a look at the major averages. Go back to the Nasdaq monthly, and on this long-term monthly chart for the Nasdaq, this monthly chart goes back to 1980, and what I want to point out here is the closing highs on a monthly basis for the Nasdaq in 2000 was 4696.69, and as long as the Nasdaq is holding above that price range, above the monthly closing highs of 2000, just before the crash and the bubble burst, I think the market should be okay. Right now it closed at 45.57, so holding above 46.96 is a sign that the market could very easily make fresh all-time highs here at about 5,300. So it needs to stay above the prior monthly closing highs if it's going to do well. Also keep in mind that the Nasdaq has its monthly RSI trading above 69.1 again, and as long as the monthly RSIs are trading above 69.1, we have to respect the possibility that this market has more upside. Let's take a look at the S&P 500 from a monthly view. In fact, let's go back to the Nasdaq. Bear with me. So the Nasdaq here, there's a price range to watch. The current monthly closing high is at 47.91.63. So set an alert, because if the market breaks above that, you want to be a buyer of the market. So set that alert, 47.91 on the Nasdaq, 0.63. If it breaks out above that, which is the closing high in November, then expect this market to continue being on fire. You can see that the RSI continues holding above 69.1. Let's take a look at the S&P 500 on a monthly view, and this is 3 years monthly. You can see that the RSI continues acting well, continues staying above 69.1 since 2013. So 69.10, the market has been holding above that since sometime in March of 2013, and you can see that the market has had a nice run. Set an alert for the S&P 500 should it break out above this most recent monthly closing high. So the S&P 500 level to watch is 67.56. If it can break out above that price range, then that's going to be suggesting that maybe the market is due for another push to the upside. So set that alert. Above that, you want to be a buyer of the market, because it could be at that point clearing resistance. Let's take a look at the Dow here in conclusion, and you can see that the Dow continues holding with its RSI above 69.1 again, which is good. Should the Dow at some point break out above the most recent monthly closing high, you want to be very careful not to be short the market, because the market could take off at that point. And the price to watch there for the Dow is 17,008.24. So if it can break out and hold above that, be careful. Otherwise, the rest of the video is for subscribers. For those of you who are not subscribers, go ahead and join and log in to watch part 2. And part 2 is going to be ready sometime this weekend. Eric Mwatha, enjoy your weekend. I am out. Peace and blessings. Woo!